Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Ken Shreve here with a breakdown of the action in today's session, where we saw stocks thrashed again and an initial resilient reaction to that hot inflation data definitely fizzled out.
Yeah, tough close for the market. Ali, looks like we closed near session lows, another sell-off. But we'll take a look at three stocks that look interesting. Grocery outlet, responding well to a very positive earnings report. Also, Kimours in the chemicals sector reported earnings last week, acting very well. And finally, in the utility space, Southern Company acting well and has a pretty good technical picture.
All right, yeah, defensive names continuing to pop up on our screens. It's what we're looking at for our watch list at this time. But first, let's take a look at the major indexes. So the NASDAQ today down 3.2%. We also had the Russell 2000 down 2.6%. The S&P 500 off by about 1.7%. And the Dow down 1%. So continuing to make new lows in this correction, Ken, that has seen the NASDAQ come down by, more than 30% at this point?
I think the Nasdaq is now more than 30% off its high, so pretty brutal correction here. Just looking for a rally attempt and to see if this index can confirm a new rally. But it's really having a tough time of it. We had technically the first day of a rally attempt yesterday, but we decisively undercut those lows today. So we're just look for a rally attempt. It's a very challenged market right now, and there are pockets of strength to watch, but these weak markets, they tend to go after just about everything. So it's overall a very difficult for new buys, even if you're looking at defensive areas of the market.
Yeah, and not only did we see the NASDAQ undercut its lows, let's also take a look at the S&P 500 as well, doing the same, and the Dow also closing below the 32,000 level today. And small caps, look at the Russell 2000 here. This is the IWM ETF, which tracks small caps. Ed and I were looking at this, how it round tripped its move out of that breakout that came late into the year in 2020 as the coronavirus rally picked up steam. So continuing to see a lot of round trips for many stocks out there of big multi-year moves, and for some indexes too.
Yeah, definitely, and it was a day that also saw money flow into to bonds, and so a big drop in the 10-year Treasury yield wasn't much help to the stock market today. But you can see the 10-year yield looks like it ended down by about 7 basis points to 2.92%. So could see yields start to consolidate a little bit here, but it's too early to say if that's going to be a help to the stock market, because if those yields are coming down, which many would like to see, it just means that money is flowing into bonds, and it could be flowing out of the stock market by doing that. So still a tough interest rate environment, but hopefully these yields will back off highs a little bit and maybe be a help to the stock market.
Yeah, so far it hasn't been, but we'll be continuing to track this, because Ken, if we did see a move below the 21-day here, I mean, which has contained this move over the last couple of months, would that be any sort of significance, or just it's still at sky high levels overall, whether or not the pace of that starts to slow down a bit?
Yeah, that's a tough call to say that. Well, if we get a break of this 21-day line for this 10-year yield, if that's going to be good for stocks, because that could just mean that, hey, maybe this the Fed may not be raising rates as aggressively as they want to right now. Maybe the economy is already in worse shape than they think. We do have a pretty tight job market, lots of jobs out there, no people to fill those jobs. But just because the 10-year yield backs off its highs, again, that happened today pretty significantly, but it did not stop another stock market sell-off. So I think the story right now is this is a stock market that's very concerned about the, perhaps a sharper than expected slowdown for the economy, and the Fed may not be as aggressive as they think they might be between now and the end of the year. So we'll see.
All right, yes, we'll have to see. Well, let's take a look at some stocks that bucked the weakness and are trying to hold up. So, starting with ticker GO Grocery Outlet, up almost 15% on its quarterly earnings report today. Some really nice volume behind the move, Ken. Volume at levels that we haven't seen, at least to the upside, in quite a while here, if ever. For a grocery outlet, I guess I could go out over to the weekly. All right, it does look like we did end up getting some blue volume about 2 months ago here, but a big upside reversal taking shape on this weekly chart.
Yeah, and you can see revenue growth in recent quarters, a little bit slack, but a nice 10% pop in the most recent quarter that they just reported. So, the guidance wasn't anything spectacular, but they did beat on the bottom line and the top line, and they also got an upgrade today from Deutsche Bank, which upgraded the stock to buy and set a $40 price target, not that far from where grocery outlet closed today. But this is just a good, solid test of the 10-week moving average, and would definitely fall under the category of a very healthy chart in this current stock market. I don't think it's too far extended at the 10-week moving average. I don't think you'd be chasing it here. So looks like it's in a buy zone. But again, if you've been over the past couple of weeks just trying some stocks on for size that seem to be working, even those sometimes just kind of fizzle because the market's so weak. So it's a very risky environment for new buys, even with good-looking charts like this. But technicals are strong, and it was a nice heavy volume move off the 10-week moving average today.
All right, great points there, Ken. And now let's take a look at Kimours, ticker CC, off a little bit for the week, but after a big move last week on its earnings report. But it's great to see after a couple of days of strong gains to see a pullback in lighter volume. I think that is welcome action.
Yeah, so the daily chart looks fine here, and I really like the look of the weekly too. It's just kind of, it's only 2 days into the week, but it's kind of holding on to the bulk of last week's gains, sitting right at the top of a long consolidation here. So this is another stock that you certainly wouldn't be chasing it by buying it right here. It's in a good sector. It's in a good industry group in the market. I've just been very impressed with how Kimours has held gains so far after last week's earnings surge.
And nice, speaking of earnings, nice quarterly numbers the last couple of quarters turning around. And it looks like some pretty good forward looking estimates as well.
Yeah, and the estimates have been heading higher. So this is a stock with strong fundamentals and strong technicals and a very weak tape. So we want to keep an eye on stocks like this. Again, it's just such a tricky environment for new buys right now. The market just tends to take just about everything down with it. But Kimours is fighting a good fight here, and I think it's in a buy zone. Market and correction notwithstanding.
Exactly. And this relative strength line over the last 2 months has been very impressive. So, underscoring the recent outperformance with this long base, it has taken off a lot of time. Is that a good thing, actually? Or does that mean that it's a little bit of a laggard? How do you kind of
Yeah, I mean, it's not. Yeah, it's tough. I mean, so you've got a really nice relative strength line that's in new high ground. So over the past several weeks, when that stock, came down and hit a low around 23, it just exploded higher with some good volume, good weekly volume. So, and the fact that it's in the early stages of breaking out of this long consolidation, I think is makes it even more compelling. Stocks can take as little as 5 weeks to form a base. Other stocks, it's just a longer breathing period, which is what this stock did. So I think technicals look just fine here.
All right, and last but not least, let's take a look at ticker SOCAN. And this is Southern Company, as you mentioned, a utility. And I mean, utilities have been pretty impressive, which I guess says something about the markets, but strong technical action here for SO.
Yeah, and it's almost impossible to find utilities that have 5 straight quarters of double-digit, revenue growth, and Southern Company shows that. This is just a electricity company. This was a very nice breakout from a kind of a long consolidation, and this is what a nice orderly pullback to the 10-week moving average looks like. So. Just kind of trading tightly near the 10-week line, holding on to the bulk of the gains post breakout. Another stock that looks appealing in this market. I mean, the utilities have been acting well. There's a lot of utilities, finding support at their 10-week moving average right now. I think Southern Company is probably one of the higher quality names
Mhm.
in the group, and another stock with pretty good technicals in this market.
All right, thank you, Ken. So it sounds like there are names for our watch list right now, stocks that are setting up, stocks that are potentially actionable, notwithstanding the market correction, as you said. So is it, more? There's more risk right now than a reward potentially for even getting a little bit of exposure in this market right now. But I guess it all comes down to what kind of trader you are and how you've performed this year.
Yeah, I mean, you definitely have to be quick on the trigger in this market. I mean, if you make a well-timed buy and the stock is up, rallies, 5 or 10% past the buy point, I know a lot of people in this type of market that are going to be taking that gain or at least taking, a partial gain. But it's just a very very tricky market. I mean, the day the Nasdaq goes up 1.5, 2%, these utilities and defensive stocks are going to be going down most likely when tech stocks are flying. And even though the Nasdaq is still on a downtrend, it's not out of the question that it's been you can see big moves in the Nasdaq, and a lot of these bottom fishers coming in and buying the Zoom videos and all these stocks that have been beaten down. And when that happens, all of a sudden these defensive stocks don't look so good. But overall, I think utilities are a good place to be in this current market because we know indexes are in a correction and on pronounced
Mhm.
downtrends.
All right. Thank you so much, Ken, as always, for that spot on analysis. And to everyone for tuning in, thank you as well. We hope you join us tomorrow morning on IABD Live because we are at on the edge of our seats with this market, waiting for what could come in either direction. And so we will continue to stay vigilant and build our watch lists and see what happens and be flexible as well. Thanks, everyone, and we'll see you back here tomorrow.